Here we are in May. Welcome to the Greater Louisville Housing Market Monthly Update. We're looking at May 2026. Hi, my name's Emily Price, and I'm with the Price Group at Keller Williams Collective. You've been following with me for quite a while, I bet, and if you haven't, and this is your first time to join us, welcome. You'll want to hit the subscribe button right now so that you don't miss any of our monthly market updates. For those of you who've been following along, you know what we're getting ready to dive into. I, Emily Price with the Price Group at Keller Williams Collective, take you through a quick, succinct, thorough, and with clarity view of a collection of insights over just what the housing market is doing and what that means to you, whether you're a potential buyer, seller, or a property owner that's just paying attention to your investment. Let's dive right in and get started to see what our outlook looks like as we round out May and we head into June. First things first, we're going to take a look at days on market. So one of the criteria points that we look at every single month is how long is it taking a property to go from for sale to offer accepted. That's a different measurement from for sale to closing day. So just keep that in mind. So when we're looking at for sale to contract accepted, well, why is that important? That measurement is going to tell us a lot about how the market's behaving. It's going to tell us about the demand energy from the buyers. If you are a seller, it's going to give you some very tactical information as to how you need to plan your process. When you meet with myself or a member of our team and we do a pre-listing consult, which is really recommended oftentimes up to 12 months in advance of when you think you want to move, we always begin with the end in mind. So when we think about if we could wave a magic fairy wand, when would your ideal closing date be? You got to identify that when you're a seller and work backwards over what the market's average time is from contract accepted to closing date, which is about 30 to 60 days. And then from there, that's where this comes into play. You have to factor in what is the current market condition in terms of how much time on average I should expect to go from for sale to offer accepted. And when you work backwards from there, which is something that we help you do in our pre-listing consult, it helps us to arrive at a targeted date to go on market, which then helps you to arrive at the targeted date to begin all of the exciting process that we take you through, such as the photography and videography and all of the other great fun things we get to do to prepare your property for market. So that's a tactical reason why this number is important. So just how long is it taking a house in Greater Louisville right now to go from for sale to contract accepted? Well, today, as we round out May and we go into June here in 2026, it is taking 54 days. So right underneath 2 months. Now, that is not a big change from where it has been in this past month. So just 4 weeks ago, we were at 52 days. 52, 54, roughly about the same. Now, when we compare that to the start of the year, we were at 98 days. Yet remember, when we're talking about the start of the year, we're talking about January, and oftentimes January does have a little bit of a different pace to it because we're coming out of the holiday season. Yet still, facts are, at the top of the year, it was taking 98 days on average to go from for sale to offer accepted, and today, as we're getting ready to head into June, it's taking 54 days, almost half that time. Now, what we really like to do is it's important to look at to see what the market is doing in the here and now, and to get even additional, more educated insight, we want to compare and contrast that to what the market was doing this time last year. So this time last year, we were close, it was just slightly faster. So this time last year in 2025, when we were heading into June, kids were getting out of school this time last year, we were right at 48 days. So what does that mean? It means the market has slowed down about a week, 6 days. It takes a little less than 1 week longer this year in 2026 to go from for sale to contract accepted than it did this time last year. When we take a look at our monthly market update here at the Price Group at Keller Williams Collective, we also want to make sure that we're paying attention to the amount of property for sale on the market. So in real estate, that's what we call the inventory. Now, why does that matter? Well, it tells you if the choices for buyers are going up or down, and it also tells you if the competition for sellers is going up or down by the number of homes available at any given time. So in the Greater Louisville housing market, as of today, as we round out May and we go into June of 2026, we have 3,473 properties available for purchase on the market. those are properties that are active for sale. So they are not pending, they have not accepted a contract yet, and they are available for buyers to write an offer on. So that means that buyers in today's market here in Greater Louisville have nearly 3,500 choices. Now, where were we this time a month ago? So is the inventory going up? Is it stabilizing, or is it going down? So here as we're heading into the summer, are we picking up more sellers faster than we are pending properties? If we are, we would see an uptick of properties for the last 4-week cadence. And that is exactly what we're seeing. So 4 weeks ago, we had 3,385 homes on the market. So we've climbed just a bit in these past 4 weeks. More sellers are coming out to the market, and just means more choices and a bit more competition for the seller right now, even though we're going into that summer market. Now, where were we at the start of the year? At the start of the year, we have to keep in mind that was winter and we were coming out of the holidays. Yet the thing about real estate is that houses sell every single day of the year. So it is very important to compare and contrast January to the end of May to understand how the year is trending. So at the top of the year, we had just a little over 3,000 choices. We had 3,085 properties on the market. So we've seen an uptick between January and right now in terms of about 400 more available properties on the market at this given time. That's the pacing that we're seeing. So more sellers are coming out to the market. Again, more choices for buyers. Now, where were we this time last year? This is where it gets very fascinating, okay? So let's keep in mind that the tighter the number of homes on the market, so the smaller the inventory, that means sometimes, and it is all very market, micro market to micro market specific. Overall, though, it means that sellers have less competition, and sometimes when you have less competition, it means you can push the pricing a little bit. And also, if there's tighter inventory, sometimes buyers have more competition, which can sometimes push the pricing for sellers as well. If buyers have fewer homes to choose from, and therefore we might be competing. So where were we this time last year? Today we're at 3,473 available choices. This time last year in the same geographical area, we had 2,621 choices. So give or take some quick math here, we have about 800 more choices, 800 more pieces of competition for the seller in today's market going into June of 2026 than we did in the 2025 market. So what does that mean? That does mean that the sellers are required to have even that much more of a refined, smart strategy, hiring a professional real estate agent to put that strategy together proactively, to execute it, and to win. It matters. The more the competition goes up, the more it matters who you hire to represent you. Now, what does it mean for buyers? Well, same thing. It matters who you hire to represent you as a buyer because you've got some important choices to make. In fact, the amount of choice has increased by 32.5%. from right now to this time last year. So that means that if you were a buyer and you were out shopping for your new home this time last year, going into the summer of last year, and if you felt that the inventory was a little bit tight or you couldn't find what you were looking for, it's a brand new market right now. So many more choices, and to the tune of 32.5% more choices in today's market. So when we're taking a look at our monthly market update, which we do every single month here at the Price Group at Keller Williams Collective, there are 5 key points we look at. One of those key points is taking a look at what the average sold price is for a property. So it's not just what is negotiated at the top of the deal, it's how it's coming through inspections and appraisal and where it actually ends and how the number that actually gets successfully to the closing table, what is that number? So here we are at the end of May going into June of 2026, and we know a couple of things. We know that the days on market are up a bit, right? We also know that the inventory, meaning the number of homes available for purchase right now, is also up rather significantly, actually. So when we know both of those things are trending up, Usually, it's an indicator that the price point might be stabilizing or even kind of taking a little bit of a breath in the opposite direction. So let's see what is actually happening. And it's just that. So today, our average sales price in the Greater Louisville area is right under $350,000. To be specific, it's $346,225. Now, just saying it just like that just kind of drops like a pinpoint in the middle of the pricing map. We've got to put some more insights around it so that we can better understand what that's telling us, right? Because I said it is kind of taking a little bit of a breath, a little, steadying out, which makes sense with the other factors of days on market going up and inventory going up. And how do I know that? Well, because this time just 4 weeks ago, just earlier in the spring, the average price point was $366,624. So these two snapshots in time that are 4 weeks apart is showing a pricing difference of $20,000 on average, okay? So that's looking at two moments in the mid-spring to the late spring. What about the start of the year? So where have we been trending since the start of the year? Well, at the start of the year, we came on right at an average sales price of basically $330,000. We were at $329,454. So we started 2026 kind of here, let's say that. Then what we're saying is 4 weeks ago, so as we were rounding out April, kind of right around Derby week, we were up. We were at $366,624. Now today, as we are wrapping up the school season, the kids are coming home from school, we are finding a place between those two numbers at the $346. We're higher than where we started at the beginning of the year, yet we're lower than where we were a month ago. Now, let's put that all into perspective. And let's really look at this year over year, because what do we know about the real estate industry? One of the things that we know is that when we look at the 50-year average of sales price for the entire country of the United States of America, the average over 50 years, so yes, have some years been way up, have a couple of years in those 50 years been down, 100%. When we look at the average, we know that properties on average in our country appreciate, meaning go up in value, by somewhere between 4 and 4.4% a year. That's the average, all right? So where were we this time last year? Are we higher than last year? Are we lower? Are we just steady Eddie? Where are we? We're higher. So this time last year, going into June of 2025, we were at $333,252 as an average sales price. And again, today we're at $346,225. And you know what mathematically that brings us to? That brings us to a sales price increase year over year in the last 12 months of 3.9%. Real close to that 4 to 4.4% average. Now, what is really important to note here is that even as we see days on market increasing, and even as we see the count of inventory, number of properties for sale increasing, we also, year over year, are seeing sales pricing. We're seeing an increase there too. So that's ultimately when it's hitting the average of right about that 4 to 4.4%. That's good. When you own a property, you want that investment to appreciate. And as a buyer, yes, it's important to get in the market and buy that property so that that equity can start serving you for your investment as well. So it's a win for property to appreciate at that healthy, normal average, which is what we're seeing it do now. So what can we infer from that? Because if the number of properties on the market are increasing and the equity growth is hitting that national average that we've seen over the 50-year mark, well, what we could probably infer from that is, yes, number of properties, meaning sellers, are increasing. And also for the demand to continue as such that it is supporting an elevated year-over-year price point, that also means that the demand is continuing to be healthy from the buyers. So arguably the demand hasn't slowed, and we're seeing indicators that our market is returning to the normal, healthy pacing, which is really quite good news for everyone. When you join me for our monthly market updates here in the Greater Louisville housing market, you know that one of the things I'm always paying attention to and always walking you through is exactly what the interest rate, the mortgage rate is doing. This is an important measurement to pay attention to because the interest rate directly affects the affordability for a buyer. How does it do that? Well, the amount of money that the buyer is going to finance in their mortgage in order to buy the house is the principal amount of the buyer's borrowed amount. The interest is the fee that's put on top of that, which is the cost of borrowing money. So as that fee, if you will, which is the interest rate, goes up, the buyer, within the context of the monthly budget that they have to stay within, as the fee to borrow the money goes up and the buyer has, kind of, let's call it a fixed monthly housing payment that their family budget needs to stick within, well, that means less money is allocated or available to pay the principal. So if the interest goes up, which puts pressure on reducing the amount of money that can actually go towards the principal in that monthly payment for a buyer, well, then the buyer can't borrow as much. And if the buyer can't borrow as much, then that means that the buyer's pre-approved amount or the amount that they choose to afford when they're going house shopping starts to be reduced as the interest rate goes up. So interest rate affects buyers' affordability. Therefore, you can see exactly how it impacts a buyer, and also it's important for the seller because as the buyer's affordability is impacted and that starts to put pressure on what a buyer can and cannot shop for, then that also has an impact over sales prices for the seller. The more buyers can afford or choose to afford a seller's home, the greater the demand it is, and therefore supply and demand, the more that tends to be in the favor of the seller. As the affordability for a price point goes down, the amount of buyers who can afford that seller's house or choose to afford that seller's house gets smaller, which means the demand is reduced. And anytime that the demand for a product, in this situation, the house of the seller, is reduced, that typically impacts the seller or the pricing, the value that that product, the house, will receive. That impacts it by putting pressure to press that price down. So affordability has effects on both the buyer and the seller. So just what is affordability looking like right now as we head into June of 2026 when it comes to how our mortgage rate is trending? So I'm just gonna go ahead and, spoiler alert, it's basically the same old story, okay? So you've been following me month after month after month for this housing market update. And again, if you haven't, I trust you'll be following me from today forward. And we've been at about the same place, really for about the past year, if not a little more than that. So let's get specific. Today, as we go into June, the average 30-year mortgage rate in our country is 6.65%. The 15-year rate is at 6.23%. Now let's compare that to 4 weeks ago. 4 weeks ago, it was slightly lower, which could explain why the price point 4 weeks ago was slightly higher. Again, that whole affordability thing, right? 4 weeks ago, we were at 6.32% for the 30-year rate, and we were at 5.91% for the 15-year. Now, at the top of the year, we have seen those rates, inch up since the top of the year. At the top of the year, we started at 6.2, and again today we're at 6.65, and the 15-year at the top of the year started at 5.74%, and today it's at 6.23%. Still though, the reason I say kind of steady Eddie is we're still hovering within that same point this whole time. Now, how does that compare to this time last year? This time last year, as we were going into the summer of 25, still in the same ballpark. We were technically a little bit higher, yet still in the same ballpark. The average 30-year was 6.97. Today it's 6.65, so we're about 0.3 of a point lower than we were this time last year. And the 15-year was at 6.26, whereas that was where it was last year, whereas today it's at 6.23. So it's basically the same thing, almost exactly. Here's what you need to know about interest rates. When we look at the 50-year average for our country, the average 30-year mortgage rate across the United States of America has been 7.1%. That's the average for the 50-year mortgage rate. So anytime you're able to lock in an interest rate that is at 7.1 or lower, you can rest assured knowing that when it comes to the grand scheme of our 50-year history in our country, you have an interest rate that's either at the average or below. You don't have an above average interest rate until it crests north of 7.1. One of my favorite things that we look at each month in our monthly market update for the Greater Louisville housing market here with the Price Group at Keller Williams Collective is that we look at something called the absorption rate. The absorption rate is the measurement of supply and demand. So supply in real estate equates to the number of sellers, and it's represented by the number of active properties on the market, which is also known as inventory. Demand is represented by the buyers, and demand shows up in different ways, and yet it distinctly shows up in the sold count of properties. Can't have a sold property unless you have a buyer choosing a home and taking it off the market's inventory, right? So the buyer has to bring that sold property through. What exactly is the absorption rate? What does it measure? Here's what it looks at. It says, let's pretend like no other seller enters the market. That never ever happens. This is just how the measurement is done. So it takes a snapshot, kind of freezes it in time to say, as of today, how many sellers, meaning what's the inventory count, how many sellers do we have on the market? How many for sale signs are there in the ground? If no for sale signs were added to that, and if the buyer energy, the pacing of how the buyers are in the market, making decisions, making offers, getting them accepted, if the pacing of the buyers stays the same, how long would it take us to sell all the inventory we have? That's the absorption rate. So then what the absorption rate tells us is that from an academic sense in real estate, we know that anything under a 5-month absorption rate is considered a seller's market. However, it is important to note, because we've been in a under 5-month market for a very long time now, that the difference between, say, a 1.8 month absorption rate and, say, a 3.2 is very different. It's going to feel very different for everyone, both sellers and buyers in the market. Now, when you hit that 5-6 month mark, that's what we would consider a balanced market, and it does not stay balanced for long. It's going to always tip one way or the other. And so once we hit that balanced market, it tends to move into a buyer's market after that, if you watch how real estate trends across the decades in our country. And a buyer's market is considered when we have 6 or more months of inventory when it comes to the measurement of the absorption rate. So where are we today? Actually, today, going into June of 2026 in Greater Louisville, we have quite a zesty little absorption rate. We have a 2.55 month absorption rate, meaning that if no new sellers came on the market and the pace of the buyers stayed the same, it would only take us, on average, across Greater Louisville, 2.5 months to sell everything that's for sale. So that's smack dab in the middle of what you would academically call a seller's market. Again, though, we need some context for perspective. Where were we 4 weeks ago? 4 weeks ago, even when the pricing was a bit higher, and even when days on market were a bit shorter, we were at 3.29 months. It would have taken us a bit longer to get through all that inventory. Where were we at the start of the year? Well, at the start of the year, we were at 2.85 months. So the start of the year started from an absorption rate standpoint almost as strong as where we are right now. And then what we always have to do is put it in the full perspective of, yes, and how are we trending year over year? We've got to understand what direction we're going in. And this time last year, we were at a 2.1 month absorption rate. So while today has picked up some energy, even since the start of the year and even since 4 weeks ago, it is still at a higher absorption rate than where we were this time last year. So what does that mean? Well, we know the inventory count is going up. We've already looked and discussed that, right? So for the absorption rate to be so steady, let me digress, to be so zesty, let's use that word instead, for the absorption rate to have so much energy in it, even when the inventory count is going up, we must infer that that means that the buyers are getting zesty as well. More buyers are coming out and more buyers are making decisions. So just because the inventory count goes up That's one fact. And the absorption rate tells us that the buyer energy is operating at a tick higher right now than it has been in 2026. So overall, Greater Louisville remains in a really steady, kind of healthy paced, has a little pep in its step type of market when we're moving at a 2.55 month absorption rate. What does that mean for you? It means it is just very important to make sure that if you are thinking about doing anything in real estate, that if you want to understand your investment, think about some future strategies for future decisions you might be making. If you decide that you want to make a decision about real estate today in terms of actively moving towards becoming a seller or a buyer, with all of these different factors in play, it's more crucial than ever that you have a professional on your side to protect you, to counsel you, and to give you all the clarity. Because when you have all the clarity, then you can make the best decisions for you and your family, especially those that come to real estate. And that's a wrap on our May Housing, a monthly market update for Greater Louisville. I'm Emily Price with the Price Group at Keller Williams Collective, and you can count on us for many things. One of them being that without fail, we're gonna come to you every single month and let you know just exactly what's happening, not just a frozen snapshot in time, yet what's happening today and what it means because we pay attention to everything else that's going on around it. You can count on us for accuracy. You can count on us for clarity. Here at the Price Group, we love the opportunity to earn your business when you are thinking about making a move. Most of our clients, we have the privilege of counseling with a month, 6 months, 12 months, sometimes even 18 or 24 months prior to the client actually deciding to get into the market as a seller or buyer. The most savvy sellers and buyers begin their process with us way in advance. So I want to invite you, if you are thinking about making a move, whether it's selling, buying, purchasing an investment property, purchasing a piece of land. Remember, Price Group also works in the commercial space and we serve Kentucky and Indiana. If you are even thinking and have the smallest question, your next best step of attack, your next best plan of action is to reach out to myself, I'm Emily Price, or any member of our team. Our number one, first primary job is to be a source of information for you in a way where it makes sense and you've got clarity. Because clarity is power. The more clarity you have, the easier it is to make the smartest decision that is going to serve you. So go ahead and hit that subscribe button right here because you can't afford to not follow along with me every single month so that you always have the wisdom of exactly how the market is performing, which keeps you on your toes if you're a seller or a buyer, and definitely keeps you a savvy investor when you own real estate. And let's be clear, anyone who owns a single piece of real estate is an investor because that property performs for you in its equity growth. And for a lot of American families, that is a huge determinant of net wealth. And it matters. It matters when you invest into something, you want to know how it's performing, and our monthly market updates can help you understand that. I'm Emily Price with the Price Group at Keller Williams Collective. Hit that subscribe button, follow along, and know that we here at the Price Group are your ultimate real estate resource.